Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson, I want to talk about something I think is incredibly important right now, and that is having a self-regulating trading pattern that you can use as a part of your trading plan. And what that means is for me, I'm going to show you an example of a pullback trade, and I have specific criteria that have to be met. And if they aren't met, then I don't have a stock to trade. And when we get into an environment like this where the market gets very treacherous, if you've got strict criteria, and it doesn't have to be to the point where only one stock passes, but if your criteria is strict enough, you'll notice that there are very, very few stocks, if any, that are passing the type of criteria you're looking for when a market gets really roughed up. And so that's, I think, how you want to do it. Instead of having a top-down thesis and saying, I think the market's going down, so I'm not going to buy anything, let the actual individual patterns dictate that. So let's go ahead and get into the criteria. I just want to quickly, or at least the agenda, I just want to quickly go through and say, look, we're looking for pullback trades, but they're self-regulating, and that means I've got specific criteria on the higher time frame and specific criteria on the lower time frame. And if a stock doesn't meet either of those sides, then I can't trade it. And I think in this type of environment, as I said, that can be very, very helpful. Even if you like the market, if you can't find something that looks attractive, then you're not trading. And so I found this to be incredibly helpful for me in my personal trading going back for years now. So let's go ahead and do that, and then we're going to go through the individual stocks that came through. So if I start with this pullback trade, I've got the criteria, and I've got on the left side, I've got the higher time frame criteria, and on the right side, I've got the lower time frame criteria. And essentially what I'm looking for is I want an uptrend on the higher time frame, and what I want on the lower time frame is one that's trading in the opposite direction, opposite of the trend time frame. Okay, so I've got my trend time frame, which is this side, and I've got a pattern that makes a new high and then pulls back to trend support. Now, trend support can be defined a couple different ways, and I'm going to show you an example of this in a second. But on the lower time frame, I'm actually looking for the opposite, where the 18 and 40 are actually going in the opposite direction as they are on the higher time frame. And that's, at least for now, they're currently trading in that direction. But one of the key things that I look at are the momentum criteria in both directions. I want to confirm, I want to measure the strength in both directions and make sure those are met. So let's just look at an example, and I think this will make more sense to you. So if I look at Microsoft, I've got, and I've boxed the area that I want to discuss. So when the stock makes a new high in price, we make a higher high in price here, and we pull back to trend support. That's the moving average. It can be price support as well, and in some cases it'll be both. If you look at this pullback here, it happened to be right at price support, but also at the 18. Now, one of the key criteria that I look at is when we're making a new high, we want MACD to make a new high, and we want the ADX to make a peak above 25. And if we have that, we have trend continuation. But the first thing that I look at when I'm going through and looking at this is not these down here, it's this moving average complex. I really like to see these moving up at about the same rate. And if you notice, they've been doing that up until the 18 finally turned. They were moving up at about the same rate. And that is really nice criteria to know that you've got a pretty solid trend in place when that is the case. So if I have that on the higher time frame, I want to go to the lower time frame, and let's just go back to this. And we want to measure the strength of the decline to improve the odds of trend continuation. And then what we're looking for is for this lower time frame to show signs in some form of a trigger that it's getting back in line with the higher time frame. So what I do is when I'm measuring the strength of the decline, I'm looking at this decline here, and that's the decline of this pullback. And I like to measure and see. Number one, I like to look at the MACD, and number two, I like to look at the red DI and the ADX. And in this case, we pulled back pretty strongly because notice how the MACD crossed down through this zero line here. Okay, a lot of overrun. And when I see that, I tend to not want to be aggressive on this first pullback. I'm usually waiting for a little bit more confirmation. The other thing is that when we get a pullback this strong, the red DI is showing some strength and making a new high, making a couple higher highs, causing the ADX to move up. Tells me again, like the MACD, that I don't need to be in a big hurry and just buy the trend line break to the downside or buy the first move to the upside. I'm usually looking for the pullback after that, which is what took place here. And that was actually a pinch here right near the zero line. And we started to see as the stock started to move up, we started to see green start to move back up as well. And we had low ADX. So if I've got the criteria that I like on a MACD and I have low ADX and I've already broken the trend line and come back and test it and now started to lift up, now I've got a criteria that's telling me that this time frame is getting back in line. It's getting back in line with this time frame, and we have a pretty good chance at trend continuation. So these are the types of things I think you want to have. Now, notice how strict these were. So if this were coming down here and then it rallied up and then it made another new low, this is a no trade. I'm not doing this trade. And if you think about it, if the market has a really nasty pullback that causes a lot of stocks to pull back really hard and creates a big red DI ADX move, and we have a big overrun in MACD, I'm not going to be buying that pullback. But if the market actually is a light volume pullback and a lot of stocks come in a very orderly way, then I'm going to be very aggressive buyer. So the individual stocks action kind of tells you what the market's doing. And how many stocks are passing will also tell you what the market's doing. So I think this is a great way to help you in today's type of environment when we've got a lot of volatility and a lot of movement. If a stock doesn't meet your criteria on both time frames, literally on the higher time frame and the lower time frame, then there's just no reason to put on a trade. You wait for your criteria to be met, and that's what you have in your trading plan. So anyway, let's go ahead and get into the individual stocks now. Just briefly, my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week, plus I have a special video for the individual package. If you're interested in trying out the service, use the coupon code StockTalk and get the first 2 months for $50. Let's get into the stocks now. Okay, so as we move into the analysis, I'm going to start the sector I want to talk about today, or the index, is going to be the XLB, the materials sector. A lot of people talking about energy, and rightly so, because it's been strong, but it's also in an uptrend. But this is interesting to me because it's more of a stealth bullish pattern. And the thing I'm focusing in on is I've got my 4 charts up now, monthly, weekly, daily, and then up in the left, I have an extra weekly chart because I want to show the relative strength by itself. And the black line is the relative strength versus the S&P 500. And notice how this has been moving higher. So what that's telling us is when this line is rising, it means that this index is outperforming the S&P. When it's declining, it means it's underperforming the S&P. And even though price has gone sideways here, since the beginning of the year, that's actually been very, very bullish for this index. And I think it's important to recognize when a market's getting hit, what is holding up. And so I would be sort of focusing in on some of the stocks inside the materials area based on how well this is trading. Now, in the short term, if you look at the daily chart, we've got a little bit of an issue here. I think 90 is probably going to be a problem. It might end up consolidating a little bit before it's really ready to break out. But the bigger picture pattern, I think this neutral type pattern is actually very bullish when you compare it to a downtrend that's developed in the most of the indices. So just kind of keep that in mind. The other thing I would tell you is that if we're going to get into a situation where everything's going to drop, we want to really be careful about something like this breaking 80. I mean, if this breaks 80, then then this area is also going to be subject to a lot of weakness. I don't think it's, the relative strength is good until it's not. And so we want to recognize that. If price breaks down, then you got to be very careful about something that's showing relative performance at that point, because momentum kicks in and then all of a sudden the relative strength starts to drop off. So we want to watch for the areas, not only the sectors, but also the individual stocks that are holding up. But as long as the market is under pressure, you got to be careful and make sure that these areas survive and these individual stocks survive until the market actually makes a clear bottom. Okay, let's go ahead and get into the next stock. So Starbucks, this is another one that just came out with earnings and got a little bit of a rally. But I think one thing we have to recognize is we now have a declining 18-month line. Okay, this line was up for years and now is turning down. Now we've gotten stretched away from this line, so yeah, we could fill in a little bit and rally. And the same thing on a weekly basis. We've got declining moving averages, and we have room to rally, maybe up towards the 90 area. But I would view this more as a trading move until we got something a little bit more well established in terms of a base and or some type of a reversal pattern, because the momentum signs are still too strong to expect a reversal right this second. Okay, so Caterpillar, another stock that I think is holding up really well. It's still sitting on its 18-month line. It's still sitting on pretty key support, I would say right around 210. A break of this 200 area, I would think, would be a pretty big negative. But right now it's sort of being resilient. So we want to keep this on a watch list. This is definitely something that I think looks intriguing. If it can get back up through 230, I would consider that to be pretty bullish. Shopify. So violent selling just doesn't seem to want to give it up yet. And, we've got this decline phase creating a declining 18-month. Now, we're stretched away from this line, right? We are stretched away from that. And maybe that causes some kind of a rally. But that's a big difference between a reversal or a real turn, which I think is going to take a long time to develop. We've got too much selling, too much strength. Don't be in a big rush unless you want to trade something like this. Splunk. So this one, I think, is doing a lot more work. So if we were to compare where Shopify dropped like this, that's kind of where this was back here, right? That's why I'm saying Shopify's too early. But this has already rallied up, come back down. It's sort of testing this support area around 100. There are signs where there's a lot of improvement. Now, don't get me wrong. I don't think this is a buy yet, but I think this is getting close. It's showing a lot more resilience in the near term. The relative strength is not continuing to trend lower. It's actually been a market performer, actually a little bit better than the market here this year. So we want to see this get back up through 150, I think. That would be kind of like the first sign. Certainly getting back above the 18-month would be a positive, but this price resistance at 150 is pretty key. Okay, so MDB. We're still in what you'd have to call a loose uptrend, because if you look at it from a price standpoint, we are still making higher highs and higher lows. We haven't reversed the trend on a monthly chart. On the weekly chart, we can say that we have turned the trend, right? We have lower highs and lower lows, and now we just made a double top, and now we're working back down to test. So if this can kind of make a higher bottom and then work its way back up here, then we could start to say that the weekly trend could be getting back in line with the monthly. But there's a lot of overrun on the MACD, and I just think it's going to take a little bit of time. It looks to me like it's trading pretty loose. It's not a tight pattern. The good news is it's not hitting a new low again. So that's a lot better than a lot of technology stocks, especially in the software area. So I would be willing to keep this on the list from that standpoint. It is showing a little bit of resilience relative to its peers, but it's pretty early. And I would not do anything as long as this is below the 400 zone, 390 to 400 zone. MMMB. So my biggest issue with this is we had this nice move to the upside, got a little bit of a spike, and then it overran the 18-month, and now the 18-month is flattened out. So I would almost assume that that level up there just above 2 is going to provide some resistance. In the short term, yeah, I mean, you could see this trade if this can work its way back up and MACD can get going here. Maybe we get a little bit of a trading move up into this resistance area. But that's about all I would be playing this for right now. Just doesn't really have all the criteria that I would look for, and just be really careful. I know this ADX looks really good, but it was based on the fact of this big spike, which actually wasn't that bullish because by the end of the month, it gave it all back. So it's a little misleading. You got a really strong DI reading based on that big spike, and we have to recognize and understand how this is calculated to realize that that is not as bullish as it might seem. EXTR. So this got hit on earnings recently. And, if we look at this monthly chart, we had a move up, pulled back, and then made a new high. And, we tried to break out above this peak and failed. And look at what it did after that. Look at the violence of the decline. That type of a pattern tells me there's a lot of resistance overhead. So we don't really want to be in a big hurry, especially now that this is below the 18-month line. There are certain things about this that are okay still, but and we're coming into some price support right now. Right around this 9.5 area should be price support. But I just don't like the recent damage that's been done and the fact that this has made a bigger top. So there's going to be resistance up around 12.5, I think, even if this can stabilize and try and get a rally going. ATO. So energy continues to trade very well. The momentum conditions are good. Okay, and that's kind of across the board, and that's also the case for these utilities that are related to energy as well. And so I really like the looks of this pattern. A nice move to the upside. It's the only real negative is that it might need to pause a little bit. It got a little bit overbought, and maybe what this does is kind of work sideways on the weekly chart a little bit. With that said, we have really good momentum conditions that confirm the up move, and we're getting that counter trend move on the smaller time frame. So if I'm looking at this as a 2 time frame play, I've got a pullback on the weekly that looks pretty high quality based on the momentum conditions, and now we're getting a decline. Now, the reason why I originally said that I think this might consolidate a little bit here on this time frame is because look at the strength of the selling. So we always want to measure the strength of this decline, and that's pretty strong selling. So I'm more inclined to believe that this is going to take more time before it can turn around, and that's why I think we could probably wiggle around in here before it's ready to go. But the bigger picture is good. The longer term trend really is not bad. It just might take a little bit of time to get going. J&J. So a couple questions about or related questions about this, and I think it's time maybe just take a few minutes to discuss this. So first of all, the question is about the relative strength. Yes, the relative strength on here is stellar, and that is something I definitely want to look for in today's environment for sure, no doubt. But I'm looking for kind of everything, okay? I want it all. So if I'm looking to buy a stock, I want it all. And that means not only do I want relative strength, not only do I want the price pattern, which looks pretty good here, I also want momentum. And we've been going up on this chart, and we don't have ADX above 25. We don't even have green DI above 25 on the monthly chart. And the weekly chart has a low ADX pattern as well, despite the fact that we're hitting another new high. These are new highs here that this is hitting, and ADX can't sustain a move because green DI can't hold above 25 long enough to get this line to move up. So when I see that, I look at this as this is a good relative stock, but is it something that's going to be really dynamic for me? Where I can make some serious money in this over the next 6 months, I kind of question that. So I look at it as a stock that maybe, I could trade, maybe do a little trading with because the support is good and the overall pattern is okay. But I want to have everything in place. I want to have the price pattern with good support. I want to have the moving average environment in agreement, which in this case we have, okay? We also have relative strength. We've got some signs of momentum based on the MACD, but the ADX is a big warning flag in this, and it's not confirming, so it would not be at the top of my list, okay? So that's kind of how I want you to look at these. Not a terrible stock in today's environment. If the market keeps dropping, yeah, this relative strength line is going to probably keep going up. But are you going to actually make money in this? That might be a tough, tall order. Okay, a Toronto stock, CES Energy. Now, we've rallied up on the monthly chart. We have rallied up to where it broke down from, and this could be a little bit of a resistance area. Remember, this has made a really big move. I know it's only 270, but we've gone from like 50 cents, 60, 70 cents, all the way up to this level over the course of the last year. So the momentum conditions are okay, but we just got a little bit of a sign of sellers stepping in. And look at what happened here. We made a new high in price, and the ADX could not get above 25 here. So a little bit of sign that, there's probably some resistance up here, and this maybe wants to spend time channeling a little bit. I would tell you that I'd be okay with holding this as long as this can hold this trend line that's in place underneath, which is essentially the 18-week. But in terms of new buying, I don't like this pullback. I think this pullback was a little sharp, so it might need a little bit more time, and it might need to spend a little time consolidating after hitting a little bit bigger resistance zone. So MFC, we had a pretty good move in the financial area, and a lot of the insurance stocks have been really strong. What I don't like about this is that it never really confirmed the trend. See how this never broke out? I mean, you start to look at some of the other insurance companies, they've been trending to the upside and holding up really well. This has just been doing nothing. It can't get through this sideways line around 22. There's no momentum in place on either the monthly or the weekly. And what that means is we have to wait for a breakout. I mean, we have to wait for a breakout. There's nothing going on here until this gets through 22, 22 and a half, something like that. And if it gets through, I want it to get through with a vengeance. Don't buy it because it gets up to 22 and a quarter on a small bar or something like that. I mean, we're looking for something that's really convincing, either a big bar or a gap, some big volume associated with it. If we're going to get out of this area and get something going, we want to make sure that it's really confirming that taking place. Berkshire. So Berkshire's been a good stock. We started to see some selling on this pullback. Okay, so think about it like I just talked about the 2 time frame play, though we have the pullback play, right? We have the move to the upside. The quality of the up move is totally fine. Momentum looks fine. But once we got to this resistance zone up here, 350, 360, we want to measure the quality of the pullback and how strong the momentum is on the way down. Look at the strength of the sellers. The sellers are causing this ADX to rise. So now it hasn't gotten up higher than this level. That's the buyers. We're below that. So if the blue line were to actually keep climbing higher and get above this level, then I would tell you that the bias has changed and we're no longer thinking up bias, we're actually thinking down bias. Okay? Very important. We have to measure the plus, that's a plus ADX peak, and this is a minus peak. There's a difference between these two. You guys are, hopefully you recognize this. Now, if the blue line gets higher than this, then we change the bias. But if this were to start to turn down here below this peak, the bias is still to the upside, but it's telling you it's going to take more time to get going. So pretty good support here at 300. Just no rush right now based on that. Autonation. So I think this is pretty impressive. Look at what this is doing. Look at how this broke the downtrend line. You could go look at Penske Automotive as well, breaking its trend line, holding the 18-month. I mean, this is no small deal in today's environment. We've got good momentum conditions. So this is actually a 2 time frame pullback play, monthly and weekly. Okay, so we want to measure the strength of the sellers here, and notice how red DI had no strength whatsoever. So I like the looks of this. Only negative is we've made a little bit of run on the daily chart. Look for some kind of a little check back into this price support 115, 120. If we get a nice little orderly pullback, I think this is something you could definitely consider. Relative strength is hitting a new high here. Very, very intriguing pattern. Steel dynamics. So we ran up in some of these steel stocks. We got to a point where the sell, I think they got too extended and we got buyers to step in. Okay, notice how this reversed at 100. You see how it had a spike up there? You see the spike? That's telling me that there's some resistance up at 100 after a pretty big run. Remember, this move started way down here in the mid to high 20s. We made a big run up and then had the pullback play. See this pullback? This is the 2 time frame pullback. Look at the strength of the move to the upside, measuring the strength of the upside, and then on the pullback, we're measuring this pullback. And look at that. So that is the type of thing we want to look for. But now we should expect some correction, some consolidation, probably have the MACD working down towards 0 on the daily. Thanks for joining me. If you have a stock you want analyzed on the show, send it to stocktalk@stockcharts.com. Have a great trading week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.